broker. Thought I'd talk to you today about the various sorts of funding which are available to small businesses, small to medium enterprises, we call them SMEs. Now, as usual, this is general advice only. Please speak to a specialist about your specific circumstances. So if you own a business and you want to take out a loan, essentially this is called a business loan. So typically you'll need 2 years of history for your financials. Some banks are going with 1 these days, but typically it's 2 years. So this essentially means you take out a loan, and it might be in your name, it might be in a PTY Ltd name. Either way, you take out a loan and you use that for business purposes. And as a consequence, then you might have tax deductions associated with any interest paid on that loan. And this money can obviously be used for whatever is required within the business. There is, say, if you want to purchase a property for your business or in the business name, this is called a commercial loan. Now, commercial lending is very grey. It's not black and white. So a lot of residential lending is this is how it is. Commercial is, it really depends on the story you can tell. So you speak to a broker about how you can go forwards and actually take out a commercial loan. Now, if you need cash, quite frequently, so most loans do require some sort of security. So if you own a home already, you might have a line of credit, or you might be able to set up a line of credit, which is essentially a really big credit card. So you take out cash that you need and you only pay interest on the amount of cash you've actually used, and then you can pay it back whenever you require. There's no time limit on lines of credit. So from this perspective, they're very useful, but they are dangerous because you're not required to pay them back. You can rack up a huge amount of debt and the interest just keeps building up if you're not paying it. And then there's also home equity loans. So again, if you own a home and you do need some cash, you can either refinance if you don't have that equity available, or if you do have the equity available there from a redraw or from an offset account, you can pull that cash out. Again, so this all depends upon having that sort of security there. If you don't have the security, then what do you do? Well, you can go, there are some lenders which provide franchise funding. So franchise funding essentially, because startups are risky, banks will, they'll kind of limit the amount of cash they will lend. So you might have to take out a personal loan or something like that. But franchise funding, because they view the fact that you're getting on board with someone that's already been set up, they've got a well thought out system, it's a little bit less risky. So they're a bit more willing to lend money if you're buying into a franchise. Now, the final topic which I'm going to look at is venture capital funding. So this includes, so angel investors, VCs who are quite well off, but it can also include things such as crowdfunding. So if you go to the market, the internet, and say, hey, I've got this idea, you draw it on a napkin, say, this is my idea, put it up on the net, someone's going to throw some cash at you. So the two different perspectives. One, if you're going to a venture capitalist, you're going to have you need quite a high level of business planning, I assume, because you're going to be dealing with someone, and it is a lot better than going to a bank because you're doing person to person, so you can use emotions, which is probably not going to work on a bank. However, if you're going to the crowdfunding side of things, the level of business planning perhaps isn't as detailed as would be required with a VC, and as a consequence, there is quite a high level of failure rate for people who go to crowdfunding, and that might purely be because they're not doing the business plan, they're not planning up front. So whatever it is you're going to do, wherever you need money for or from, or wherever you're going to use it in your business, make sure you have a business plan. You need the business plan. This is going to allow you to determine what you're going to do over the next 12 months, over the next 5 years. What happens when you come up against roadblocks? How do you deal with those roadblocks? Who's on your team? What happens when someone on your team leaves? So all these things, just make sure you know your business plan. And if you have any questions or queries about these topics, please let me know. Please share this, like this video, tell a friend. My name is Tom Simpson. I'm a credit representative 478783 for Voyage Wealth, Australian credit license 444489. Until next time.